Hi, good day, guys. My name is Nick, technical analyst with Citrodex, and today we are looking at the analysis on the futures of natural gas. And as usual, we will be talking about fundamentals first, then we'll move down to technical analysis, which will involve support and resistance analysis, price action, and also trend movement. And now, first of all, talking about fundamentals, we have noticed that lately European natural gas prices have seen a minor decrease in early trade, but an overall continuation seems to remain high for the month. And this is, of course, largely due to predictions of a colder weather and concerns over supply following the cessation of Russian gas transit via Ukraine. And of course, the benchmark Dutch TTF contract has experienced a 1.2 decrease, now hovering at 49 euros per megawatt. And last week, it had broken the euros mark following the confirmation of halted Russian pipeline flows through Ukraine. Now, this halt was due to the expiration of Gazprom transit deal. And of course, it has been noted that the European gas market is receiving additional support from the forecast of colder than usual weather for the next 2 weeks. And this, of course, could potentially lead to a quicker than expected decrease in storage levels. Now, it has been noted that while the current storage levels should be sufficient for Europe to get through the winter without issue, the refilling of storage during the injection season could prove to be a more substantial task than last year. And of course, this has been having similarly effect on the market. And looking up to technical analysis, first of all, having a proper analysis of this will be, of course, marking out our very important support zones. We have support currently at 187.9, and we have a very major support which had tested 3 times at 154.5. And we'll be observing our resistances, of course, too, as well, not to leave that out, at 261.6. And another resistance happened at 297.8. And the final one, which happened at the 338 axis, which is 338.1 axis. Now, observing this, we need to also mark out our trend lines, which has been filled with higher highs and higher lows. And we'll mark out the trend line on the upside too as well. Now, hopefully, the market tends to break out of this trend line point. Now, acquired and tested at 347.7, we're expecting a breakout of the lower lows and lower high zones, and a fall through should be expected at 254.8, where we'll have our first take profit zone, which is right here for a sell, 252.3. And possibly, if a breakout happens on this very important support zone, our next support will be at 218.9. But if in case it doesn't happen like that, we are expecting maybe a short-term sell and then a bounce back up to the upside to counter the 347.7 landmark, and then a push up to the 350, 360 zones. And that's our analysis on today's futures natural gas. I remain your host, Nick. Bye for now.